All right, let's talk about an alternative way for seniors to pay for dental implants. So we all know dental implants are expensive. So according to GoodRx, a single dental implant can cost between $3,500 to $6,700, and a full mouth dental implant, which would be both upper and lower arches, could cost between $43,000 to $56,000. In other words, by getting a full mouth dental implant, you're basically putting a brand new car in your mouth, which is crazy to think about, but dental implants they're just expensive. So the question then becomes, how are you going to pay for it? How are you going to pay for that large expense? So we know Medicare and Medicaid are not going to pay for dental implants. Some of the Medicare Advantage programs or plans could pay for a small portion of them, but it's pretty minimal. Your other option is you could pay cash, so you could pull money out of your retirement savings, you could pull money out of just your personal savings or checking and pay cash. Or another option would be to get a Care credit card and finance them, and your dental office probably offers Care credit cards, but that's assuming that you qualify. So let's assume you didn't want to pull cash out of your retirement savings, and so you're going to look at getting the Care credit card. Well, I went on Care Credit's website, and this is what I came up with. This is assuming that you're going to finance the full $43,000 for dental implants, and we can see that the lowest payment that they offer is $1,161 a month. And for a big portion of retired seniors, that payment is just too much for the majority of people out there. So there is an alternative, which I think is a pretty good alternative because it does kind of a double duty for you. So let's take a look at the scenario. So Cheryl is 67 years old. She desperately wants implants, and she needs both the upper and lower arches. She has an income of $2,200 a month, and she owns her home free and clear. So she has a $400,000 home. There are no mortgages or liens against it. She does have $75,000 in retirement savings, but she can't afford that payment on the Care credit card. Because if she financed those with the Care credit card, the payment on that is going to be half of her monthly income, and that's just too much for Cheryl. She desperately wants the implants, but she's not willing to take on that amount of monthly payment to get them. And she also doesn't want to pull out a big chunk of money out of her retirement savings because she knows that she's going to need that money at some point in the future to either pay for medical care, possible car repairs or even a new car, home repairs and maintenance. Like, she needs that money. So should Cheryl give up on getting implants and just settle for dentures? And I don't think Cheryl should. In fact, I think that Cheryl should consider getting a reverse mortgage. And so Cheryl gave me a call, and this is what her loan would look like. So for Cheryl, the blue represents her home value, and we can see that's increasing over time because we are assuming a 4% appreciation rate, which historically is pretty accurate. Some years it's more, some years it's less, but on average it's about 4%. The orange represents the loan balance, and we can see initially she's starting off with a $60,000 loan balance. That's because she's pulling out the $43,000 for her dental implants, and she's lumping in the closing costs. And we can see that this loan balance is increasing over time, and that's because we are assuming that Cheryl is not going to make a monthly mortgage payment towards the reverse mortgage. And because she's not doing that, the interest in mortgage insurance is just getting added to that loan balance every month, and therefore it's going to grow. The green, which we can see here, is the line of credit. And so we can see initially that after pulling out the money for the dental implants, lumping in the closing costs, Cheryl still has $91,000 available to her in this line of credit. And we can also see that this line of credit is growing over time as well. The reason that this line of credit is growing is because any funds available in that line of credit are growing at the current interest rate plus 0.5%. So it's not stagnant. So in this scenario, we can see that Cheryl is actually starting off with a line of credit that's even larger than what she has in her savings account. And that money, assuming she doesn't use it, just continues, the line of credit continues to grow. So there's just more and more available for her to draw from at some point in the future. And if she draws any money out of this line of credit, she still does not have to make a monthly mortgage payment. She still has to pay her property taxes and her homeowner's insurance. But if she draws money out of the line of credit, she is not required to make a monthly mortgage payment. Now, for Cheryl, she doesn't like this growing loan balance. She just doesn't like it. It doesn't sit well with her. And she figures that she could make a payment of $500 a month towards the reverse mortgage. And so she decides to do that. And this is what her loan looks like by making that monthly payment. Again, we can see the blue doesn't change because that's the home value. But the orange, remember, this is the loan balance initially. In 15 years, she's got this thing paid down to almost $12,000. And what's really exciting, not only is she paying the loan balance down, but in this line of credit. Look how much bigger this line of credit is. So if we look in 10 years, at which point Cheryl would be 77, she has $268,000 in that line of credit. If she didn't make the payment, she would only have $182,000 in that line of credit. So by making that payment, she's basically added about $86,000 to that line of credit. You could think of it as basically kind of like a savings account, right? She's making the payment, the funds are still available to her, and any funds in that line of credit are growing. So again, let's look at 15 years. She now has $414,000. And at that point, Cheryl would be 82 years old, at which point other expenses are definitely going to be, or more than likely going to be popping up, such as medical care expenses. She might have to be paying for yard care or a maid service to help take care of the property in the home. And now she has access to all these funds in the line of credit. So by using the reverse mortgage, Cheryl gets the dental implants that she wants and needs. She doesn't have to drain her retirement accounts to pay for them, right? So she's going to leave all that liquid cash in her retirement savings to help pay for other expenses as they pop up through the rest of her retirement. She creates a lot of financial flexibility in the monthly mortgage payments, in the fact that she can not make a payment. She could make a payment. She could pay as much or as little as she wants on the mortgage. She could stop, skip, reduce payments. It just gives her the flexibility that any other type of loan would not provide. So the reverse mortgage just gives her a lot of flexibility from that standpoint. So she still has to pay her property taxes and her homeowner's insurance. It also creates an additional source of funds to draw from by setting up the reverse mortgage line of credit. So we saw initially in Cheryl's situation, she's setting up a line of credit that's even larger than what she has in her savings account. And if she doesn't use it, it continues to grow. So again, it just creates another source of funds for her to draw from by setting up that line of credit. And if she makes monthly mortgage payments, she has access to all those payments at some point in the future, as long as she's following the terms and conditions of her loan. The primary conditions, terms and conditions of her loan are living in the home as her primary residence, paying her property taxes and homeowners insurance, paying any other property charges such as homeowners association, utility bills, etc., and taking care of the property. All things that Cheryl is already doing. So if you've got questions, you want to see how this would work for you, you want to see what your numbers would look like, you want me to forecast what's possible with the reverse mortgage for your situation, give me a call. There's no cost to speak with me. There's no obligation to speak with me. And I'm happy to answer any questions that you might have. So give me a call and let's see if this would work for you. Thanks.